wrap up the day, we have three of the best, what we call three of the best. They're three interesting, innovative concepts. 7 minutes is the rule, not a second longer. And I think we'll start. I think Max Aengevelt is going to give us the first of the three presentations. Thank you, Max. Stage is yours.
Okay, good afternoon, everyone. I think it's a pleasure to speak here and to get the 7 minutes to hopefully get an interesting point across. Quickly to myself, my name is Max Aengevelt. I'm a member of the fourth generation of Aengevelts who have the privilege of working in our family company. For those of you who don't know the firm, we are a large German broker. We proudly think of ourselves as one of the few large service providers in the German market, which is still family-owned, and hopefully we intend to keep it that way. So as a reward for you, those of you who stayed until now, I might be able to offer you a strategy of how to make some real money with real estate, or at least an idea of how to do so. So basically, it's a strategy of actually you're investing actually into residential, but the interesting thing about it is that you're actually not investing into a residential asset as it is in the current state. So just to understand the angle that we're taking, I'm just taking you back. Obviously, this is all known to you. Prices of residential property in the big 5 cities in Germany has risen substantially. The same goes for rents, especially if you look at the levels that from Berlin, from where we came from to where we are now, has been a substantial rise, especially in the pre-crisis period. So, keeping in mind these very low levels of rent, what did this mean for previous developers who had a piece of land, a property to redevelop? At €6.50, you cannot feasibly build any residential property because simply the rent that you would be achieving or the sales price of a condominium is simply too little to actually make it work financially. So what happened is that often even inner city plots in large cities such as Berlin were developed far below the maximum usage of the plot in let's say a residential area. So the developer would have just taken a plot of land and would have said, I'm not going to build a whole house because I can't achieve the rents or I can't achieve the sales prices for a condominium, and simply build. And that's the asset that I would like to focus on today. Just a single story supermarket in a residential area. So basically, the asset that we're looking at, if you drive around the city, looks a little bit like that. You see the supermarket embedded into a residential area, but simply a one-story supermarket where it's quite obvious you can go up 4 or 5 stories and build residential on it. So basically, the characteristics of these supermarkets are that they are usually on larger plots of land, as you need some space for parking. And they usually have some years left on a fixed term. Usually when they come on the market, they would at least have 5 years left. Often options after that to keep on renewing the lease. But we're still looking at assets which are traded at the price of actual retail properties, so above 6% in yield. But essentially you are buying a residential asset because you have a piece of land that can be developed to residential. So we are very focused on practice. I'd just like to go through an example with you of a property that is actually for sale. We are in Berlin-Pankow. For those of you who don't know Pankow, this is a dynamic district of Berlin with the lowest unemployment rate. It's where young people moving. People are getting pushed out of London, we would say the inner zone, are moving to this kind of area. So a healthy area. Now you have here Edeka supermarket. These are smaller type of supermarkets which only have 800 square meters of sales space and then a little bit of storage and other facilities. That supermarket is in fact giving you an annual rent of 117,000 euros and it has a sales price of 1.6 million. So you're looking at the typical yield of a retail asset as such of 7.3%. You have a lease term left on that property of 7 years. So now if you leverage that a little bit, you'll be able to get to a cash-on-cash return of around 10%, which obviously as an initial yield outperforms any other type of asset that you could buy. Maybe not logistics, but certainly residential and certainly office in prime locations. So now if you just calculate that, after 7 years, after the fixed term, you would be left at, let's say, 1 million debt on the property. The share of equity, which hasn't yet been returned, is 150,000. That is not taking into account the cost of capital, but this is just a quick calculation in order to meet the 7 minutes time slot. So basically, your break-even point is at a little bit more than 1 million. Now, this piece of property is sitting in the middle of a residential area, and in fact, that particular piece of property had a planning permission from 96 or 97, which allowed you to build 2,500 square meters of net area, buildable area. Now, if you assume construction costs of 2,000 euros, a margin for the developer of 20% on that, 500 euros, that allows you to pre-charge 500 euros per square meter. Of what you can build. So essentially that gives you a price today. If the property would be available today without Edeka as a tenant, that would already cover your break-even point after 7 years. So a strategy like this, a property like this, leaves you with two upsides. One is that Edeka continues to lease, pulls the option, so you continue to enjoy returns which are above other asset classes, or that Edeka vacates the property, which, by the way, is usually not so likely, and you can actually develop that property into a residential building. And for that 7 years, you have the upside is that the property matures further, you further enjoy increases in depreciation for the value of residential property. And as you're only holding a piece of land, obviously that increase is going to be a multiple of what you would be holding if you would be holding the finished product, as you can build more space on the land than you actually have land. So basically, if you that kind of strategy, the tactic that we're playing is that you are buying properties which are let at the usual yields of residential properties, but you are looking for properties which are sitting on plots of land which are not fully used, so which are in residential areas where you have residential planning permission, zoning, and where you could use the property to build much more on it. So if you look at assets like that, you can hold them, have a good return that outperforms other assets, but at the same time you're replicating residential, as you have a piece of land which is usable for residential, which then gives you another exit should ever the tenant vacate the property. And if they don't, you keep on enjoying these returns. So we've made the effort to look into this. I've explained earlier where this comes from. And if you just look at the five big operators, Aldi and Lidl being the discounters, Rewe, Edeka, and Kaisers being supermarket chains, just in Berlin, we could identify about 100 supermarkets or plots of land that would actually allow this kind of reusage as apartment buildings or mixed use properties. So that would, if you would sum that up, would probably give you about 10,000 new apartments. Thank you.
Goesta Ritschewald will be talking for his 7 minutes on his investment project.
Thanks for the opportunity and the chance for introduce ourselves. My name is Goesta Ritschewald. I'm the managing partner and founder of Deutsche Investment, together with, I'm not alone. I brought Michael Sehm with me, whom I can't see right now. Oh, it's over there. So he's our managing director. We belong to a large family office in Germany, Deutsche Seereederei, and are a regulated investment firm, open-ended funds. We're doing B2B only, catering to qualified investors, which are institutionals mainly, family offices, pension funds, and so on. And we've just switched from promising startup to up and running newcomer. We're doing all asset classes. We just issued and we raised and invested a residential fund focused on Berlin. We're looking into retail right now. And there have been asset classes which haven't been mentioned yet, and they even have been forgotten in the introductory. So I brought you. That was too quick. I brought you an asset class which is more familiar, which is better known in international markets. In Germany, it hasn't been touched almost at all. It is not illiquid, but it is mainly driven by private investors, family offices, and it hasn't become institutional at all. So we have looked into the market partly due to our shareholder. It's a huge market. It comprises a couple of surprises. It is it's almost a sleeping giant with large potential, general size overall. So it's not hidden because of its size. It's simply, it wasn't accessible. We have German investors. What we've learned is that German investors usually follow international trends. So they are not known to be very brave, not front runners. If you recall what happened in the residential market, it took Guy Hans and Cerberus to not that I'm saying they haven't been German invested, but it took them to drive the market towards institutional and taught them how to make money on this years ago. And we see that these investors are doing it, that they are going into leisure investment. That is a surprising fact, we believe, because the leisure industry is within the hotel way bigger than the business travel. So there are good reasons for German investors not to go into this market. There are no brands. That is at least the perception. There are no comparisons. And obviously, it needs to have a pipeline to go into it. However, we have, and there might be other reasons, that's why we left this open, which we don't know, why German investors always tend to go behind international ones before they look into markets which turn out later on to be profitable. So we felt it makes sense to talk to international investors with that product, with this opportunity, introduce it to them to see if that could be a first mover into the German market, since we can provide this into a regulated entity, being a regulated investment firm ourselves, we would be able to put this together. Coincidentally, our shareholder is the inventor of one of the most profitable tourism brands worldwide. I don't know how much familiar you are in the UK with it, but the AIDA cruise ship line is a brand which revolutionized this market, now is sold, and we're still into the market. So we operate brands. We just came up with a new brand called Aya. You see the heart on the left corner, which is a budget leisure hotel chain. Just opened the first one, about 10 more venues in the pipeline. 2 are already broke ground and are built. It is as if Model 1 would have put cocaine on the cornflakes. It's absolutely fantastic. They have 97% occupancy. Totally booked for 2014 till midsummer. So overall, it's 60%. And we felt that is a product that might raise interest because it's branded. It's an experienced operator, and we can provide the product. We can provide the vehicle, and obviously there's an international track record that you can show, and that we can explain to everybody. So we felt that would be something we'd like to discuss. And that's all we say, because we have the figures we have the calculations, but I do not want to run you through figures. I do not want to go through every details with you. Returns are above what we've seen today from logistic, even though a hotel is much easier to refurbish than a logistic venue. So we feel that is an interesting product we'd like to discuss further on. And so that's all we do, that we will launch this fund. These are actually current hotels. They're true pictures from our hotels that we could bring into the fund, but we don't have to. So we would like to introduce, or we would like to go into the discussion about if there should be more development-oriented fund, if we should buy a ready product and take it from there. We are in the final concept phase. Like to discuss this with a broader audience and see if it could be something for an international investor who has less experience already to enter the German market in that particular use. So that was pretty good within the 7 minutes, but that's why can I offer you some answers to questions in case there are ones. Thank you very much.
Are we within 7 minutes still?
If there are questions, otherwise we can discuss afterwards.
Otherwise, we can certainly discuss it outside. I think we've just about hit our 7-minute limit on that, so those are the rules. Our final speaker tonight is Michael Ullmann, who is, there he is, and he's got an idea to present to you as well.
So imagine that you want to become the president of the United States and your richest friend is Brad Pitt. That's good? No, it's not good enough. It's not good enough, particularly if your opponent is the frontman of and has some friends who are really rich. So what do? You want to become the president of the United States, and you don't have that few friends with a lot of money. Right. You try to find a lot of friends with few money. And how do you do that without of shaking 200 million hands and having 10 fundraising dinners a night, or have millions of one-on-ones? Yes, you know the answer. You do it through the internet. That's possible. And Barack Obama did it. He collected more than $400 million for his 2 campaigns just through the internet. And in the second campaign, I guess some 20% of that incremental amounts through mobile phones. We liked that idea so much because he just didn't get the money. He got a couple of additional advantages with these new friends, with his crowd. Because who do you think all these millions of supporters who gave him money voted for? Of course. What do you think they told their neighbors? He knew them because they left their bank accounts details to them. So he could approach them, integrate them in his campaign, discuss topics with them. He created a community around him, and that was tremendously successful. 50%, I would say, of Barack Obama's success was possible through the internet. And again, we liked that idea so much that we said we want to transfer that idea to real estate. Why not collecting money through the internet for property? And we did that. It's called crowdfunding for real estate. And in Germany, we say for that Kapitalfreunde. It's our website, www.kapitalfreunde.de. And you can collect. I have a video as well, but you don't have to see it. It's not fitting in the 7 minutes. You can collect or choose a project, look for finer details, and then fully online invest into that project. Fully online means we have very low cost per any additional customer. And so we can accept amounts of 50 euros or above for real estate capital. And we have a community on that website and in Facebook where people, investors, can ask questions. You heard that. They can interact with each other. They can see the questions anybody else had. And that's called wisdom of the crowd. And we enable real estate companies, developers, investors, capital seekers. We enable them to create a community in the internet of new friends, of real supporters, of capital providers. Like Barack Obama, you get new supporters and you get free marketing in this community of the internet, which is so tremendously important, we just heard. No real estate company can escape today that publicity of the internet. And you create your own community in the internet. Of course, first and foremost, you have a very innovative and cost-efficient way to collect money. Currently, in form of subordinated loans at mezzanine capital. In near future, also regulated products, the new type of Web 2.0, open, closed-end funds. This is equity capital. In the little more distant future, we also will offer that products. Now, when you can do that, it's you get the same benefits than Barack Obama. Again, you create your community, and you have access to new forms of capital and new investors. So there's only really one thing I would like to encourage you to do, is visit our website, www.kapitalfreunde.de, and do it. Try it out. It's really simple. It's easier than buying a book at Amazon to spend 250 euros for a real estate investment. There are two differences to Barack Obama. We do make promises and we have to keep them. So we offer, for instance, a yield or an interest rate, and we have a fixed term when we have to return, or the capital seeker has to avoid the money. And the second big difference probably is that we do accept in the first years, we do also accept larger chunks of amount of money from